Hi, everybody. This is Lance from datatraders.com. This video, I'm going to look at my current safeguard positions and possible considerations for rolling. I'm going to look into rolling either the naked puts or roll the put credit spread, the sold put there, and look at the possible premiums at different DTEs. I'm not sure if I'm going to do any of these trades, but just been filling around with looking at the premiums and also looking at the buying power required to do this. Does use some extra buying power rolling up a make a put, which probably doesn't seem worth it to me. It could still be very safe trades. You can boost your income a little bit more from them, as you'll see. For an ES, you might be able to get an extra $100, $200 off the trade in a relatively safe way. However, you're going to need a few $1,000s in buying power. So it's really up to you if you consider the pros and cons on that one. Let me share my screen real quick. Lovely family. All right. So current positions, we'll look at ES first. So I have a ES 43 days out, 112 right here. Currently, it's near 90% decay on the 4350 naked puts. We're at 88.4% decay. Sold it at 19.75. Going to look to close it at around 2 or slightly less. So if I look at just simply rolling the strike up, in 43 days, 4350, really far away. We're over 1,000 points out of the money. But when you look at considerations for this, there's no right or wrong answer to these. It's really up to you if you want to look at the pros and cons. If I roll up a bit, say I roll up to 45.50 or so, you're not going to get much premium there, 0.4. So you're looking at about $25 times 2 contracts, $50. Still very safe, to 0.01. The buying power is not too much either, about 588. So that's a reasonable roll, I think. Could be a little bit more aggressive. I would consider near 0.05 delta, to be honest. You go all the way up to 4,900 or so. 4,900 is getting pretty closer to the current price. So you are increasing more risk there. You could take in 4.85 premium, 50 multiplier times 50, then times that by 2 contracts. Take in an extra $485 this way. However, the BP use is $6,000 more, which is pretty dramatic there for taking in that amount of money. However, we do have the 5,049.50 put debit spread. I just personally wouldn't want to be that close on the naked puts to this debit spread, because if it does drop, this could significantly hurt, and you're pretty much offsetting the gains on the PDS at that point. So you can kind of go in between those two numbers, the slight roll and the big roll. We look around 4,700 or so. Decent volume, 0.03 delta, take into premium, 2 times the 50 times 2 contracts, make $200. Uses 28.59 in buying power. You just figure out the return on your buying power, or 7% in 43 days, is pretty good. You still have that protection of the 5,049.50. So this could make another 50 times 50, $2,500 extra in the debit spread. So I would possibly look somewhere around the 4,700. It's still a low delta. And this is being a little bit more aggressive, more active trading in order to do these things, by the way. You don't necessarily have to. Just by letting this expire worthless, if you look at the original trade, took in 30.8. I'm going to close out the naked puts at around 2. Let's do the math here. I got 19.75 times 2. Took in 39.5 on the naked puts. I'm going to close that at probably around 2 each. Close it around 4. 2 times 2 contracts. 35.5. We also did 74.2 minus 65.5. That was the put debit spread. 74.2 minus 65.5 is 8.7. You could net 26.8 premium on this trade by closing this out at 2, which will happen pretty soon, most likely. And you could keep this debit spread on. So you get an extra 50 with $2,500 possibly. Times this by 50. You can make $1,340 doing nothing besides closing these out at 2. And this uses about $11,000 in buying power plus the cash on the side. Make 12% in about 3 months. It's still a really good trade. 12 divided by 3, 4% a month. So if you want to boost this up a little bit, make more than 4% a month. Again, this is assuming that this put debit spread makes nothing. So it could make a lot more, possibly. It does give protection against the rest of the account. If you want to boost it up more than 4% a month, you can roll this up. And if you want to be a little safer, just roll up a little bit. 4,500, 4,550, somewhere around there. Want to be aggressive on it? Roll. I wouldn't roll to the port at 4,950. Probably around the max I'd go is around 4,800. Taking another 3 times 2, 6, $300 there. If you want even more possible bigger profit, if it drops a lot afterwards, you could close the naked put. It's already at almost 90% decay. You would have to pay about 8 premium to do it though. But then you would have a ratio spread. You would just own one of the 5,000 puts and keep the 2 4,300s. You could even close those out too and just have the 5,000 put. It'd be a good hedge. But you are significantly lowering your return there because you would have to pay about 8.3 more. Similar situation in the 55 days. Hi, Doug. How are you? I'm going over rolls right now on my safeguard trades. A little bit more advanced, but just showing some possibilities here. In this safeguard trade, I was in it for 62 days, about 2 months. We're at a good profit already. The naked puts, 4,300 naked puts are already at 84% profit. We'll look to close those at around 90% profit. So took in 19.5. I'm going to close them close to 2. I'm looking at, again, a little bit more advanced, so you don't have to do this. But we're looking at rolling the naked puts up to get a little bit more premium on this. Yeah, all perfectly optional. This was from a separate trade. I'm currently in a 49.55,000. So if I roll the 4,300 up to say 4,500 or so, you can take in 1.2 credit. 1.2 times the 2 contracts, 2.4. And then you have a 50 multiplier for a yes, it's times by 50. You make an extra $120 on the trade by rolling up to the 4,500. It does use up an extra $1,200 in buying power, which not too bad, but it is something to consider. The delta is still very low at 0.02. Still a relatively safe trade, and we still have the debit spread at the 5,000, 49.50. These are all possibilities, but I want to also go over what the profit could make just by closing this out and doing nothing else. So we took in 19.5 on the naked puts, 2 of them, and 39 premium on the naked puts. The debit spread was 81 point, on my calculator here, 81.25 minus 72, paid 9.25 on the put debit spread. So our net premium when we started the trade, same number here, 29.75. I'll look to close these 4300s at 2 each, 2 times 2 contracts, subtract 4 from that. So if I close those naked puts right here at 2, I would net 25.75 premium and still have the 5,450 the debit spread on as a hedge. 25.75 times 50. This would make $1,287.50 on the trade, and it'll typically take about 3 months to do that. We're already pretty close. We're already at 83% decay. I'm going to look to close these at 90. This trade takes about $11,000 in buying power plus cash. You're looking at 11.7% return in about 3 months. It's a good return. Divided by 3. Looking at almost 4% a month on your trade. If you want to boost that up a little bit more, or putting in a little bit more risk, you need to roll this up. But we still have this debit spread protection here. And I would look at rolls that are still pretty far away from the 49.50. Probably look around 150, 200 points up in a roll. Get too greedy here. You go around 4,800 or so, you're getting a little too risky, in my opinion, even though the delta is a bit low at 0.05. You take in good premium, 4.85 times the 50 times 2 contracts. Make an extra 485 on the trade. But you are putting in more risk and you're using up a lot more buying power for it, another $4,500. Do you have any questions on this so far?
Just trying to keep up.
Yeah. All right. I'm going to show you just a basic safeguard trade. Like if I was going to start one today, this is how I would do it. Yeah, what I'm going over here is quite a bit more advanced. But this is how you'd set up the trade. You typically look around 120 days out. 116 is close enough. This is on ES right now. You could start with MES, a smaller account size. For MES, you need about $1,100 buying power plus cash. If you're doing it with ES, times that by 10, you need about $11,000. First, I'm going to buy a put around the 0.25 delta. So I'll buy the 5250. I'm going to you click on the ask for that to buy the contract. And then at the 5200, I'm going to click the bid. This makes it a put debit spread. Typically, I look for around 7 to 10 in the debit. It's reasonable. Then that's a debit, so I want to make a credit out of it. I'm going to look to sell 2 naked puts against it. The delta's high right now to get around 20 premium is what I look for. Right now, I have to go up to 0.08 delta to get a little over 20. At least 0.07 delta, you get 19. Then I want to sell 2 of these. So the way to do that is you double click the 4,700 contracts and change the quantity to 2. You got to highlight just that to get 2. Otherwise, I'll make 2 of everything. And the total premium would be around 30. 30 times a 50 multiplier for ES. You make $1,500 when you're starting the trade. It uses about $6,000 in buying power. You want to leave about 5,000 more in just cash and not trade against it. $11,000 total. This is how I'd enter the trade if I was doing it. Once this trade is filled, go to my positions tab, and then at the 4,700 strike, just pretend it's this one. I'm just going to do a GTC order. Just get rid of all that. Just pretend that's the one there. We're just going to close it at around 2 premium. And I'll make it a GTC order. So just leave it on and then eventually I'll close it. That make sense, Doug?
Yeah, 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 I'll get it.
Yeah, you'll get it. It's in the strategy guides too, and there's videos as well. So go over it, and you could rewatch this if you need. Other things are I'm going to look at some possible rolls on oil and gold. I already did roll this one, 0.5. I made a previous video on my YouTube page for it. Let's look at the other one at 103 DTE. So in this one, I bought a 70 put on oil. I sold a 68 put. It's a 2 width here. Then I sold 2 at the 59 naked puts. Currently, we're pretty much break even on it. The market dropped quite a bit and then it's now recovering on oil a bit. It's not going to necessarily be worth rolling much because I'm only in at 17 days. But if it was in the trade longer, it would be more advantageous if the market didn't move much. I would consider rolling up from 68 to 69. Get rid of everything else. So on a quick roll the strikes up. Go up to 69. By rolling up 1, I could take in about 0.28 or so premium. That's $280 more that you're getting back from the initial debit. The problem is you're losing that 1 width. So this could make another 1 instead of 0.28 premium. But by doing that, you are taking in some premium as well. So your initial debit costs a little bit less than it was before. Hi, both Bills. How you guys doing?
Good morning, Lance. Good. How are you, man?
Good morning. I'm just going over possible roles with my safeguard trades and how much premium you could collect. So I did that with ES. I'll show you what I was looking at again. This 43 DTE on ES, I did that 90 days ago. And the premium on the 4350 naked puts is really close to 90% profit. So normally I would just close this out at around 2 premium. Took in close to 20, buy it back at 2, and then lose all the risk on the trade. I would leave the put debit spread on as protection. What I'm looking at now is rolling the 4350 put up and try to take in a little bit more premium on the trade. Notice how I have a 5,049.50. So when I'm going to roll it, I don't want to get close to the 49.50 just because there'll be a lot more risk there. But you could do slight rolls a little bit higher. So I was looking at around 100 width. So I'm rolling it up 100 points to 45.50. You only take in 0.4 premium about. ES 0.4 times 50 multiplier for ES times 2 contracts. Make an extra $40 on the trade. Not a huge amount. Your buying power isn't that much more either. But this is still a very safe trade, I would think, just because the delta is still 0.01. 44.50 when we have a 5,049.50 still a lot of protection there and a pretty big jump. So you go up a little bit more possibly. Again, this is all optional. You don't have to do any of this. As you watch the recording later, you'll see the return is still very good anyway. But if I go to say 4,600, 0.02 delta, take in a little over 1 premium, 0.15 times 2 contracts times a 50 multiplier, make an extra $115 that way. The issue is the buying power goes up because we're closer to the money now. You need another $1,700 in buying power for it. These are all just considerations if you want to try to take in a little bit extra return on a already very good trade. Does that make sense?
Yep.
So I was
So
looking
you're
at it
rolling
with,
up the short put. Yep.
okay. So I was looking at it with oil right now. It doesn't make much sense just because I have a lot of time left, 103 days out. We can look at gold. I have a put side on gold that's only 49 days left. This 41.75. I did a 111 here, not a 112. This gold is very volatile and I don't want to use too much buying power for it. It didn't really decay much. I sold one at 2.4. It's only at 2.1. So it wouldn't really make much sense to roll this just because you're adding on more risk for it. But if you did roll up a little bit, I currently have a 2250, 2245 put debit spread for protection. You roll up to around 2200 or so. It's again, it's a bit risky, but you would take in an extra one premium that way, get an extra $100 off it, and $600 in buying power. So I think it's preferred to do these when you're closer to expiration and you were on the trade a long time, just because the naked put would probably decay a lot more. And then you could consider rolling up at a still relatively safe strike. Just remember what your put debit spread is. So you still have that protection on the downside. I do have a few really long dated MES trades that this could also consider. For this trade right here, I did it 37 days ago. Still 134 days out, so a lot of time left. I'm not going to necessarily do anything right now on it. I want to wait a bit more. But what I would consider here is rolling up the 45.50. This is a 300 with put debit spread, so a big grab profit possibly. I took in 9.75 premium, not a lot, but you can make more by rolling the short put of the put debit spread up.
So would
Go
you
ahead.
roll it to like 150 up?
Yeah, I'd look around there. So 45.50, go to around 4,700. Taking an extra 5.6 or so premium, $25 more there. This is MES. With ES, you'd be
So $25 more.
yeah. And then you still have 150 with, because you'd have a 48.50, 4,700. That's still a good amount of protection there. When volatility goes up, these numbers would be a little bit better. VIX is still really low. It's in the 12s again, I think. So because of that, it's doesn't seem that worth it. I even wrote on the trade, you can't see it all. I said roll to 150 with around 120 days. So around 14 days from now, I'll look into rolling the 45.50 up to 47. Taking a little bit more premium that way, still have a big trap profit, 150 with. And the 41.50 is still really far away. Questions on that?
Murray was rolling them the 300 with to 150. Was it after 30 days or was it after 60 days? I forget.
I think he was rolling 100 with first, and then I think it was 120 days. But the way that I wrote mine out is a little different than his. I was gonna roll to 150 with in 90 days, and then I think at 60 days I rolled to the 50 with. You can fiddle around with different numbers there. It's probably not gonna be a dramatic difference either way. We still have a lot of time left.
Sure.
If you want to be safer in the trade, you would roll up faster or less DTE just to take in that premium, but then you have a less trap profit. So it's a fine balance. It's like a seesaw when you're in a kids play area. And if you go down one way, you go up the other way. So if you roll early, you're losing the possible trap profit, but the possibilities of these profits in the trap are pretty low as it is anyway. So kind of you want to be safer and take in a little bit more premium and kind of lock it in by rolling it in, or you want to go for a possible bigger profit later on. Find balances between this stuff.
Makes sense.
That's all I have for what I was going to talk about. Do you guys have any other just general questions about anything?
No, not
Nope.
really.
I think I'm good.
All right, sounds good. I'll send the recording out, and if any questions, let me know in the Discord.
All right,
Thanks,
thanks,
Lance.
Lance.
No problem, guys. Have a good rest of the day.
You too.